Hi, this is Yehong. I'm a option trader. Today is April 11, 2026, and it's 11:14 p.m. Japan time. Let's take a look back at the market. First, the Nikkei. The Friday closed was 56924 yen, and the SQ price came in at 56573. So overall, it settled at a pretty high level. Last SQ was 52909 yen. So we are up about 3500 to 3600 yen. We did not break above the February SQ level of 57000, but still, this is a strong outcome. Now about the Middle East, there are signs of ceasefire and easing tensions with Iran, which helped calm the market. We are watching for escalation, but for now, things have settled down. Of course, it could flare up again anytime, but at this moment, the market is taking it positively. Volatility has come down as well. The volatility index is at 30.61 and the Nikkei PL is at 20.42. ABS has recovered to around 2787 yen. So overall, the market is clearly in a recovery phase. There was no major shock this time, no real breakdown, no panic. So I'd say this event is basically no count. USD JPY is around 159 and still moving in the weaker yen direction. Japan 30-year yield is up to 3.59%, so the bond market is still a bit unstable, but equities in Japan are holding strong. Looking at the US, S&P is at 6817 point. VIX is down to 19.23. Moving index is around 72. Gold is at $4748. Not much change there. So both Japan and the US are recovering after the Iran situation. The market is regaining stability. Last year in April, we had a Trump tariff shock. This year, we did not get that kind of the collapse. That's a key difference. But one thing I'm watching carefully is momentum. Both market and turned negative once, but now there's a back to positive territory. The question is, it real or is it fake? We still don't know what could trigger the next move. So I think cautious is still necessary. For Nikkei, the key level is 60000 point. Can the make it nearly break over that? It's positioning clear enough. That's something we need to watch. Also, starting this April, we have the BOJ ETF starting a program on daily basis, and the size may not be huge, but structurally it's still a new selling pressure. So from a supply demand perspective, this is something to keep an eye on. And regarding the homes rights issue, even if we have a chair fire, this is not over. It's not resolved. The market has not reset. The risk is still there. It's just being postponed. Now, changing the topic a bit, space stocks. I think the environment is actually quite good for them. With the Artemis program process progressing well, the probability of success in the space industry is increasing. In a world with rising geopolitical risks, space becomes more important. Demand is growing. And with Artemis, the technological credibility of the entire sector goes up. So, from a thematic and perspective, space and the defense stocks was watching. We also need to track where the money is flowing at the individual stock level. Oh, I think we are still in a wait and see phase. Momentum has recovered, but we need to stay cautious. One announcement About the market model I mentioned before, I have decided to make it public. Originally, I planned to make it a paid service, but instead I will release the graph openly. I won't explain how to read them. Each of you can interpret them in your own way. I think making it public creates a more value. More people looking at it creates better feedback loops. You can access it from the link in the Spotify description. No login needed. There are three graphs. I won't explain what they represent, but this is the model I use to analyze the market. So if you listen to this podcast while looking at the chart, you will get a deeper understanding. That's all for today. Follow along with the mindset of building a long bit position. See you tomorrow.